to record this because this is going to be a nice, easy, simple, and really great training. Man, I feel bad for those who don't who don't get on this. But I want to say something about Shanika. Again, Shanika came to me about a year ago, and she came from an environment where she wasn't as successful when it came to trading, right? So she came to me again. She wanted to learn how to trade. She wanted to learn how to be profitable. And I said, yo, you partner up with me. I promise you, you will learn how to trade, right? And between me, my community, you will learn how to trade. You will become profitable. Now, it was a process, but eventually she did become that trader. And then to the point, she even started, building the business. And now watching her pour into you guys and her just growing and developing as an individual, like, she reached out to me on a different subject. I'm not going to get into it. And she requested something. And I said, man, that's what I'm talking about, the growth. At the end of the day, I'm all about growth. I'm all about, if you guys are with growth, man, type a 5 in the chat, man. Like, I was like, yo, that shows growth. No matter what's going on or anything like that, my goal is always to evolve, always become better, always to show growth. And for her to show the type of growth that she's shown just in a year's time frame lets me know the next 12 months, I expect nothing but legendary stuff from her. Like, seriously, like, she's going to have such a breakthrough. She's going to have such massive success. I hope a lot of you guys stay connected to her. I hope a lot of you guys stay close, plugged in, because she's going places. All right. She is definitely going places, man. So once again, shout out to you, Shanika, man. All love. I love what you're doing. Keep going, keep striving. Do it for you, do it for your family, and most importantly, do it for everybody that's on this call. So what's up, everybody? What's going on? I hope you all had a fabulous happy 4th. I was looking for the holiday. There we go. So what we're going to do today is we're going to keep it nice, simple, and easy, right? We're going to go over a simple, easy strategy, right, that I use on a day-to-day basis. That's going to help you guys not only in the foreign exchange market, but also cryptocurrency as well. All right. I was actually just finishing cutting up some new training videos, so this is perfect. You guys are going to like this. So as always, you guys know I trade in the mornings from Monday to Friday. Obviously not today because yesterday was July 4th, so I knew the market wasn't going to be doing nothing. And it's already being recorded, Paco. So, I mean, Shanika's already taking care of that. But yeah, usually I try to trade throughout the week around 8:30 and 9. I'll drop the link, and then we'll go over trade setups. So we're gonna go over last week's trade setups. In the signals chat, I don't throw a lot of trades, but when I do, they're pretty good. All right, they're pretty good. So let's go over the last few here, and I'm gonna show you guys how you can take high probability trade setups. All right. So let's go over this CAD JPY, the sell setup. I called back on the 22nd, right? So the beauty about trading, guys, is when you understand market structure. And what is market structure? Market structure, basically, in its simplest form, is how the overall market moves. All right. So the market moves in 3 ways, right? The market goes up, market moves sideways, and then the market continues, right? So it goes up, down, sideways, right? Down, sideways, right? Continuation. So there's an actual sequence to all this. So you have an impulse, right? You'll hear traders say that, hey, the market made an aggressive impulse. You'll have a correction, right? Or also known as consolidation. And then you'll have a continuation, right? That's just how the market moves. It moves in this 3-part sequence, all right? I don't care what type of strategy you trade. I don't care what you will find this 3-part sequence in every single strategy. So if I look at, let's say, Elliott waves, right? Elliott wave trading, right? If we look at certain images, right? So Elliott waves is based on a 5-wave theory. So if you think about it, the market does what? You have wave 1, wave 2, wave 3, right? There are 5 waves. But look at the waves, right? So again, you have an impulse, you have a correction or a consolidation, then you have a continuation, right? You also have, right? So you can look at any type of example. That's how it is. You have Wyckoff trading. All right. So if we analyze Wyckoff trading is pretty much the same thing, right? It's price cycles, right? Accumulation and distribution. But at the end of the day, you have that spring, which is your impulse, right? You have your correction, and then you have your continuation, whether going to the upside or to the downside. Does that make sense? Everybody type a 1 in the chat. Does everybody get that? Right? So I don't care what type of strategy you have, what type of style of trading, that's how the market moves. All right? Type of 1, everybody gets that. No confusion there. Perfect. Awesome. So let's just look at this chart. Right? Again, big impulse, big correction, consolidation, and then your continuation. Right? So if you notice, again, I was looking for a sell setup, right? I had a sell setup over here. Now, why was I looking at a sell setup? Well, I'll tell you. Because price came rallying all the way down here, strong aggressive move to the downside. That when this pulled back, again, this was my impulse. So this would be my what? You can type it in the chat. That would be my what? Right? So there's an impulse, and then there's a retrace, right? Correction. There we go. That's the right word, correction. And then you get your continuation. All right. So now there's usually a pattern that's also associated with this. A lot of times people know me as the flag guy, right? So impulse, correction, continuation. So if you notice, this looks like a flag, right? You have your pole and then you have your flag. The flag is your consolidation. But then I realized something. I said, you know what? I want to make this easier. I want to make this simple because a lot of people were struggling when it came to flags. So I said, you know what I'm going to do? I'm going to call this a retest, right? I'm going to call this correction part, this consolidation part, we're going to call it the retest. Why? Because when price is consolidating, notice how you know price is going to continue going its direction. It doesn't break the impulse. See that? Right? I'm going to give you a few examples. Notice right here. Perfect. See how price came up aggressively and then it consolidated? Notice how when it consolidated, every time you're trying to figure out where price is going, find the impulse of that leg. And you see how price was not breaking this low when it was consolidating? That means continuation to the upside. Same thing going down. Impulse, correction. Notice how it did not break the pole, that leg. And then continuation to the downside. Did everybody understand that? Type a 2 in the chat. I want to make sure we're all on the same page here. Yes, yes, yes. All right, perfect, perfect, perfect. Good, 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 good. All right, now, if you guys notice at the bottom here, I have an indicator called the MACD. All right, now you can go to indicators, type MACD 4C if you want the same one I have, and then signal line squatter. MACD 4C signal line squatter. If you click on that, ta-da. Now, how does this work? Real simple. The MACD is a momentum indicator. All right. It is a momentum indicator. It is a what? What type of indicator? I'll make sure we're on the same page. What type of indicator? Momentum. Thank you, Sherry. It is a momentum indicator. Basically, it measures the strength of the trend. All right. So it has three parts. It has the histogram, right? It looks like a mountain in the background, right? There's green and red, right? That's the histogram. It has the signal line, that white signal line crossing over in between. And then there is the zero line, right? There is the zero line. Boom. See that zero line, right? Those are the three components of the MACD. You have the zero line, you have the histogram, and you have this signal line. All right. So when momentum, right, is green, you are in an uptrend. Pretty simple. When momentum is green, you're in an uptrend. When momentum is red, you're in a downtrend. When it's shaded red, that means the downtrend is strong. When it's light red, that means the downtrend is getting weak. The opposite on the uptrend. When it's light green, that means the uptrend is strong. When it turns shaded green, that means the uptrend is getting weak. The white signal line, right, basically lets you know when price is changing momentum. So the moment the white signal line goes from red to green, you are no longer in that downtrend, you're in an uptrend. When it goes from green to red, you're no longer in an uptrend, you're going to a downtrend. And the way to confirm that is it must cross that zero line. Does everybody get that? Right? It must cross that zero line, right? Type a yes in the chat if everybody gets that. Does everybody get that? The signal line must cross the zero line. That's how momentum is truly change direction. All right. So it doesn't change direction until it crosses there. So that's it. That's the MACD in simplest form. Nothing hard, nothing difficult, nothing complicated. That's how the MACD works. All right. It's a momentum indicator. Boom. Now, I don't use the MACD in its traditional sense. Meaning most people, when they utilize the MACD, all they're doing is basically waiting for this to cross over, right? Cross over to buy, cross over to sell. And matter of fact, there's actually one more part. So whenever you see the white signal line crossing through the histogram like this, that is the worst time to jump in the trade, right? That means momentum is at its strongest. All right. Never buy. So you never want to sell when the signal line is going through the histogram. You never want to buy when it's on a downtrend when the signal line is going through the histogram. All right. That's the worst time to buy. You want to see that airspace. When it breaks out, that's when momentum is finally getting weak. When you see that airspace. But again, I don't use the MACD in its traditional sense. I use it to identify structure points in the market. All right. And what do I mean by structure points? Basically, key levels in the market. All right. So, for example, see how price right over here? Boom. What is momentum on the MACD right now? You can type it in the chat. What is momentum in the MACD right now? It is what? Bullish. That's right. It's in an uptrend. It's bullish. So that means this is a structural point. Price is in an uptrend. Boom. So now price went from this uptrend to now a downtrend, right? So now we're in a bearish trend. We're going down clearly, right? Price is coming down. My MACD is coming down. But look what happens. Price has now returned to a what? Bullish momentum, an uptrend. Now, based on the size of this histogram, is this histogram bigger than the previous, right? That's my question. Yes or no? Is this bigger than the previous? The histogram, is it bigger than the previous? Yes. All right. Now, here's the thing though. We don't care about that. I'm going to say that again. We don't care about that. For us, it is about not how big the histogram is, but the location of price, right? So the high of this bullish momentum was up here. The height of this was right here. Now, looking at price, is this, right, where current price is this higher than the previous high? No, that is correct. No. So because price did not break the previous high, we cannot look to buy. You know why? Because when you're in a trend, price is always going higher and higher, right? So for example, see this uptrend here? Notice how price is going higher and higher. Price is just going higher and higher. Because when you're in a bullish momentum, that's what price should be doing, creating higher highs. Just like when we're in a downtrend, right? Let me get like something like USD CAD. We're in a downtrend. We're creating lower lows, right? We're coming lower and lower and lower and lower and lower, right? And if you notice on the MACD, every time it crosses over, it gets lower and lower and lower, right? So whenever we're looking to buy or sell, one of the things that we're looking for is to see if price has previously broken structure. All right. So in this case, price has not broken previous structure. That's a good thing. So now it's literally about, okay, cool. If this doesn't break this high, then I can't be looking to buy because it hasn't broke the previous high. Looking at my histogram, it has not broken the previous high. See, the same thing over here. Came, gave you another bullish momentum right over here. Right? Notice, did this break the previous high? Asking you guys. Right? No, it didn't break the previous high. So again, if we're not breaking the previous high, the only thing we can do is sell. Sell. Right? If we're not breaking the previous high, you can't look for a buy, you look for a sell. But before we get into that sell, we must factor in something else. All right. That's just one component. See, the thing about trading is you're looking for multiple confirmations before you jump in the trade, right? So a lot of you guys use the hourglass to trade for HFX. So if you notice, you got multiple confirmations. You got, you got the moving averages, you got the overbought, oversold, you got a bunch of rules. All right. Trading is about having rules. You got to have set rules in place. Right. So that's just one of the rules. All right. So to make this easy, now that everybody understands this, we've kept up to this part. Now it's about, okay, so how do I take a high quality trade? All right. So here's the rules, guys. The first thing I want to do is before I jump in the trade, I want to look at the time frames. All right. So write this down. I know this is being recorded, but some people need to, write down their notes, take a mental. So the first thing I want to do is I want to look at the higher time frame. Now, what is a higher time frame? All right. Now, Most people think anything above the previous time frame is a higher time frame. Yes, but there's actually only 3 specific higher time frames. All right. The highest time frames are the daily, the weekly, and the monthly. All right. Those are the 3 highest time frames. Anything lower than that, those are just smaller time frames, intermediate to smaller time frames. So I always like to look at the daily chart. All right. I always like to look at the daily chart, at least bare minimum. All right. Because each candlestick represents that time frame. So looking at this, when I saw this setup, I said, okay, perfect. We're in a daily uptrend, but we're also at a daily, weekly resistance. All right. Now, for those who don't understand, resistance is basically a level that price has reached when it goes on an uptrend and it is struggling to break. So it's like me throwing a basketball at the ceiling. If I throw a basketball to the ceiling, what's going to happen to the basketball? It's going to drop down, right? That is resistance. So I know I'm at this resistance point, but this is where a lot of traders make mistake. They automatically assume that price is going to respect that level. No, you can never assume. We are not in the assume business. All right. That's the fastest way that you can mess up and blow your account. We are in the confirmation business. All right. We want to confirm before taking that buy or sell. So I see price is getting to that resistance zone. Perfect. Now what I want to do, if I'm looking for a sell, and the reason why I'll be looking for a sell, because when I look back at previous market structure here, what do I see? Price did what? It dropped, right? You always want to look at previous history. You want to see what price has done. So I notice price has dropped. Perfect. So if I'm expecting the same thing over here, right, I have to factor in the same things. So notice right here, guys, and this is just on the daily. Look what happened. Price was in a bullish momentum, right? It crossed over to the downside, came back up bullish. And what happened when it came back up bullish? What did not take place? Huh? What did not take place? Price didn't break the ceiling, right? Price did not break the previous high. So you got that sell. So I need basically the same thing over here. All right. Now, in order for me to catch this, all right. Now, excuse me, here's a little tip. Whenever you're analyzing the chart, never, right? Never take the trade on the chart you are analyzing, on the time frame you're analyzing. So if I'm analyzing this off the daily, I don't want to enter off the daily. I'm going to miss the move. I don't want to enter off the daily. I want to go to a smaller time frame. So if I'm analyzing something on the 1 hour, I don't want to take the trade on the 1 hour. I want to jump down to a smaller time frame. All right. So this is off the daily. So now I want to jump down 1 or 2, right? 1 or 2 time frames. Boom. I'm at the 1 hour. All right. Now, the first thing I want to see is what is called a break of structure. A break of structure. Now, remember, the whole point of us using the MACD does what? It identifies structure points. So every time it goes red to green, it is identifying structure points. All right. So this is what I mean. This right here is a structure point. This right here is a structure point. This right here is a structure point. So on and so forth. Every single thing based on that time frame is a structure point. So when I look at price, I know, okay, this is a structure point for the downside. This is a structure point for the upside. This is a structure point for the downside. This is another structure point for the downside. So again, I'm at this resistance. I'm looking to what? Buy or sell? You guys tell me, am I looking to buy or sell? I'm looking to sell. right? Because I'm at this resistance point. So that means I need a break of structure if I'm going to look to sell. So the first rule I need is I need a break of structure. First rule, right? 3 rules. First rule, I need break of structure. I need a BOS, right? Break of structure. All right, we're going to make this simple, easy, nothing too complicated. All right, so I need a break of structure. So that means I need price to close below this region. I need price to close below this region. Perfect. I got my break of structure. Perfect. Price has closed below that region. The second thing that I'm going to need a retest. All right. Now, what is a retest? Right here, guys. Retest trading is basically when price is reversing direction. So we were in an uptrend, right? We were in an uptrend. Now we're at this daily resistance. Based off of past experience, we're looking for a reversal. All right, so I'm looking for price to reverse. So I'm looking for price to reverse in direction. After it breaks structure, I needed to return to that breakout level and see if it will hold. All right, so I'm going to give you guys examples. So perfect example right here. So you see how price was at this support, price broke, and then it came back to retest that level. Came back to retest that level. See that? And it did not break. It held, which led to the downside. All right. Same thing over here. You had this resistance. Price broke above the resistance level, came back and retested and held, which led to the upside. Right? So I need that over here. I need price to break structure, and then I needed to come back and retest that level. So that's where the MACD really comes in. So it came, it broke structure. Now I needed to come and retest. Now, between these 2 points, which one is the retest? All right. Is it point A or point B? Which one is the retest? You guys tell me, point A or point B? All right. And why B, guys? Somebody said A. Can somebody explain why not A? Why isn't it not A? Why B? Nope, not because it's larger. Nope, Eric, that's not why. Because the white line did not cross over the 0 line. All right, got to remember the rules. The white line did not cross over the 0 line. It didn't cross over here. It crossed over here. It crossed over here. The white signal line crossed over, right? That's why. This is why this is the retest. So what I do is wait for the retest, right? I wait for the retest. And if price does not break the previous high, which was right over here, then I look to sell. Ta-da. Does that make sense? Did everybody get that? Type of 1 in the chat if everybody understood that, right? So 3 simple rules. Nothing hard, nothing difficult, right? So 3 rules. BOS, which is break of structure. 2, retest, right? Now, what's 3? Now, 3 used to be the cross of EMAs, but we found a new way of how to enter the market, right? And this is the imbalance candle, right? Now, before we used to do the cross EMAs, but then I realized even with the cross EMAs, it's still slow. We needed something better. So what I did was I started studying smart money concept and I started incorporating it. And now it's been actually working wonders. So what's an imbalance candle? So I'm going to show you. An imbalance candle is this. It's a 3 candle process, right? So you'll have the 1 candle, the 2nd candle, and the 3rd candle. So the second candle, that's the key. It's a big candle, whether it's bullish or bearish. And what it happens is it separates candle number 1 and candle number 3. There's a gap, a space between the 2. Everybody see that? All right? There's a gap. Right? See that? Same thing over here. You see how there's a gap between this candle and this candle? Yes? Everybody see that? Good. Right? This is what is called an imbalance candle, right? Whether bullish or bearish. So let me show you some examples. So this would be an imbalance candle right here, right? So you see bearish, see that? You have that one big candle right here. So you see the gap between the 2? This would be an imbalance candle. Let's see again. This would be another imbalance candle right here, right? And what you want to do is you want to train your eyes to see these candles, right? They're all over the charts, right? This is another imbalance candle. Right? See how the wick, and there's a gap between this one and that one, and you just have this big, large candle in between, right? So that is an imbalance candle. So, okay, Steve, I know what an imbalance candle. How do we use that in conjunction with your strategy? I'm glad you asked. So, again, rule number 1, when we're looking for a trade setup, the first thing that we need is a what? A break of structure. So I got my break of structure. Perfect. Second, I need my what? What's the second part? Need a retest. Perfect. Now, like I said before, it used to be wait for the cross EMAs. Now it's not that anymore. Now it's wait for an imbalance. So when price comes to retest and I confirm that it's not breaking the previous high, which it isn't, as soon as I'm at the retest, I want to use in conjunction, look left and find an imbalance candle. All right. So once I'm at the retest on my MACD, right? Retest, boom, retest. Identify your imbalance candle. So now that I'm at the retest here, can anybody see, right? If anybody knows how to write or annotate on the screen, can anybody find for me where an imbalance candle is, where this retest is happening on my chart? This is my retest. Then I want to look left and find an imbalance candle. Nope. Incorrect. Thank you. I don't want to butcher her name. Makita's. Is that correct? There we go. Thank you, Makita. Not here. These are imbalanced candles, guys. Absolutely. But remember, I said look left. You're looking at the impulse. Wrong, Harris. That's not it. She already pointed out right here. Here. came up. Boom. I'm in line with the retest. I look left. There's my imbalance candle. That means this is where my entry would want to be, inside here. Entry inside here, stop loss above, right? And I'll show you how to get a smaller, tighter entry, but I want you to understand the concept first. So impulse, boom, and there's my move to the downside. A nice 117 pip move, right? Why isn't this, even though you identify somebody crossed this up? Yes, this is an imbalanced candle. What's the problem with this? Right? And you can unmute yourselves from what Shanika says. So if you guys want to unmute yourself, go ahead. What's the problem with this? Why isn't this invalid?
Would that be because it's in the uptrend? Like
that's
it's
right.
Not.
It's not even. It's in the uptrend. It's in the uptrend, and not only that, we're not even at the retest part. Right? The only time you look for your imbalance candle is when you're at the retest. And that means the white line has crossed over. The white line has not crossed over. You do not look for no imbalance candle. Because if you do, that's what's going to happen. You're going to start taking the wrong ones, right? Boom. So like perfect example, when this came back around, look right here. Again, why is this still invalid right here? Why is this one still invalid? By the time price got here, why is it still invalid?
It hasn't crossed over.
It hasn't crossed over. It hasn't crossed over. It hasn't crossed over, right? You just look left. All you do is look left.
So quick question.
Yes.
Not to cut you off. If in that same example that you just said, would this candle be the imbalance for this one if I wanted to go up?
That's the one. That's correct. Because you are officially at the retest. This has crossed over. Look at your MACD and look where price is at. So to answer your question, Makita, yes, this would be your recent imbalance candle. So entry here, up move there. All right. So how can I use this for HFX? Easy, right? You guys trade on the smaller time frames. So let's say I'm trading on a 5-minute time frame, right? So again, same rules, right? Same rules. So the first thing I want to look for is a what?
Break of structure.
Break of structure.
Break of structure. I got break of structure, right? And then what's the next?
Retest.
Retest.
Right? Then I'm looking for a retest. And then at the retest, I'm looking for a what?
Crossover.
Imbalance.
Not a
Imbalance
crossover.
candle.
Imbalance candle.
Imbalance candle.
Anybody want to point out the imbalance candle? It's pretty tight, but it's there. This is your retest.
Mm-hmm. Right here.
All right. There you go, BI. All right.
See that.
Right. It's pretty small, but if we zoom in,
Yeah, it is right there.
right there.
Who you got? Oh, wait. Randy's car?
Could
gotta
you
be
mute
working
yourself,
tomorrow.
whoever's talking in the back? Right, there we go. So there you go. Imbalance. Right. So look at that. If I'm trading HFX, right? There's my imbalance. So my imbalance is right here, boom, right? Price just really nipped it. Look at this right here. You guys take 5-minute, trade setups, 60-second trade setups. Look at all of that time just to ride this to the downside. Right? What was the trade somebody took today? What's a trade somebody took today? What's a trade somebody cleared? Or Forex or HFX? You can type it in the chat. Didn't somebody say they traded today? Or what was the trade you guys took last week or something? Right? Euro USD. What was it? A buy or a sell? Or a call or a put? So a buy. Right?
No, he said put.
Oh, put. Okay, so sell. So let's say I was doing a sell. Right? So a put. So again, I want to follow the rules. Now, this isn't the cleanest, right? I didn't get a break of structure, but just to show you how this would work, right? I didn't get my break of structure. So you usually want to get the break of structure because you want to know that price is going in that direction. That's why this overall is an up move, but this would have still worked. So for educational purposes, right? I got my cross down. I got my retest because at the end of the day, this did not break this previous high, right? So somebody outside of BI, right? I'm at the retest. Find my imbalance candle to the left. There you go, Harris. Right there. Right. Now, getting in a trade like this,
Steven,
what's up?
is the imbalance candle pretty close to level with the retest always?
Always. Again, that's the extra confirmation. So
Okay.
I don't look for my imbalance because imbalance is everywhere. Right? There's an imbalance candle here. There's another one right over here. So again, that's why the rule is I don't look for it until my MACD has retested.
Okay, so but always the imbalance candle is pretty close to level with the retest.
Always, right?
Okay.
If it's not, then again, it's not valid.
It's not valid. Okay.
All right. So boom, boom. So if you would have taken, let's say, an hour put, you'd be in profit. Right? Look at that. A 3-hour of just straight downtrend. See how that works? Somebody else, another trade setup that they took. Whether Forex or HFX. All right, nobody trade today, nothing. Great Brain Cat. All right. Now I'm using the 5-minute. You can do this on any time frame, right? So for example, right here, perfect. I got and I could go all the way back, right? So if you want, you could, especially if you're in HFX, what you can do is identify the current trend. So the current trend of this was downtrend. So I would, if the overall trend is down, that means I want to be on the sell side of things. Even though this goes up, I want to be on the sell side of things. So whether I'm on the 15-minute, 5-minute, whatever, but rules are rules, right? So I got a break of structure, retest. Somebody find the imbalance candle. break of structure. There you go. All right. Break of structure, retest. Now, sometimes price might not come all the way up to your imbalance zone, right? It might nip it like this. That's okay. That's all right. You still follow the rules. The thing about trading, guys, you have to follow your rules. So I miss out on this. No problem. Follow my rules again. What's the first thing I need to wait for?
The retest.
No, that's not
Break
the
of
first thing.
structure.
Break of structure. So now break of structure again. I get another break of structure. Now what's the second part?
Retest.
Now I
Retest.
need this to come back up. Retest. Again, somebody find me the imbalance. Somebody else, not Makitas. Not BI. BI, you already know this. Come on, man. Let your counterparts learn. One thing about learning, guys, you got to participate. Believe it or not, you will learn trading way better if you participate. I promise you, you'll learn way better if you participate. So Harris again, there you go.
Just can't see the screen, bro.
You can't see the screen,
Yeah, you need the candle right now.
but
There
right there,
that's a little bit- Okay.
imbalance candle, right to your left, right at that retest part, and look at that. Look how much time, right? So if you would have put a put here, you would have had about 16 hours of just pure sell on this trade, right? You just hit annotate right next to the pause share where it says annotate. That's how you write. So then again, I had a break of structure. Right? I had a break of structure, right? Remember, every time on your MACD, it crosses over, it's creating structure. So break of structure, perfect. Then I have a what?
Retest.
Retest. Right? So this is for the person that put a put on GCAP. And then
Look to your left.
yep, and it's the same zone.
It is.
It's the same zone. And then look at that. See how that works? Does everybody get this? Everybody understanding the concept? So how you can use this in both Forex and HFX? Something real simple, something real easy, right? So I didn't want to make this too long, too complicated. I just wanted to come on here and give you guys something simple to understand because I know a lot of you guys are brand new. But this right here, this is clean. This is easy, right? It's not too complicated. You don't have, thousands of indicators or anything like that. It's just following 3-step rules. What's the 3 rules?
Break of structure.
Retest.
Retest and the imbalance candle.
Imbalance
Yep.
candle.
Once you're at the retest, look for your imbalance candle. So beauty about HFX, you don't have to worry about stop loss. But if I'm in Forex, where I have to put a stop loss, so my entry would be here, stop loss at that high, and then your TP to the nearest, support resistance or take profit whenever you feel comfortable. But as you can see, solid, clean strategy. Makes sense? Anybody got any questions?
No.
Pretty straightforward, right?
Yeah.
It is.
Very straightforward.
Very straightforward, very easy, it's very simple, something everybody can follow, right? And literally, you can go back. If you guys are in the Discord, most of the trade setups that we call in the group is based on these rules, right? So like, we caught the sell on Euro USD 2 weeks ago. So we caught the sell, right? We caught the sell and we caught the buy, right? Because this came down, we said, oh, we're at the 4-hour retest. We notice it's not about to break here. We look left. And then we caught this nice little buy, right? Do you have time, DK, if you hold the trade for a long time? What do you mean, DK? Is the imbalance level better than EMA cross? Yes, way better. I think so. BI, what do you think?
Yeah, I agree with you.
All right. Everybody that we put on so far, they absolutely love it because indicators lag. No, Elson, no. To answer your question, no. Any other questions? No? Well, I just wanted to jump on here. As always, pour into you guys, drop some nuggets. Do got to jump on another call, unfortunately. But hopefully you guys learned something. This is recorded. I don't think this was too complicated. I think this was very straightforward, broken down very easily and simplified. And as you can see, you can apply it in any market to your day-to-day strategy. So even if you guys are not, understanding whatever trading that you learn right now, you're not, I think this will be something easy, simple that you can use to be profitable in the market and has a high risk to reward setup. What guides your take profit? Depending on the setup. So let's say, for example, I'm looking at this, right? If price does not break this low, right, I'm going to take this to the next high. Right. Whenever I'm trading Forex, as far as take profit, it's to the next high or low based on that time frame I'm trading on. So if this is based on the 4 hours, so the previous high would be up here. So I would take it all the way up here. That would be my take profit. Right. You're welcome. All right, guys. So I'm glad you enjoyed today's training lesson. Please don't take it for granted. Go out there, apply it. Again, give thanks to Shanika because she set this call up. She really wants you guys to win, wants you guys to succeed. This is pouring into you. This skill set works, but it only works based on how much time and energy you put into it. One thing about Shanika, BI, others, they put a lot of time and effort into this. You got to put a lot, like I'm dedicated to learning my craft. I'm dedicated to getting better. And, Shanika's been with me for a while. BI's been with me. They'll tell you I've evolved. Right. I'm not the same trader I was a year ago. Right. I'm always looking to get better. I'm always looking to, you know what I mean? Like I was just explaining to somebody was like, hey, I used to be a part of IML 2 years ago, but then I left. And now I watch a lot of videos on YouTube. I said, listen, I have students that have been with me for 2 years. 2 years. And they actually know how to trade. I'm talking about these are individuals who are doing $10,000, $20,000. They could have been left. But you know why they stay? Because iron sharpens iron. They are getting better. They understand that no matter what, the education never stops. The development, the growth never stops. Nah, I keep refining my skills. I keep getting better. I'm always learning something new. And every time I learn something new, it gets me that much better. Why do you think Apple keeps dropping new iPhones? Because they're getting better. Right? That's why when you see a new product, a new car, a new vehicle, right, they're getting better. So you want to get better at your craft, that means a lot of dedication. You cannot come in with a short mind frame and think, oh, I'm going to learn how to trade and be profitable in 30 days, 60 days. That is not the mindset that you want for this. All right. At the end of the day, you're going to have to work hard in anything that you do in life. I realized that a long time ago. You're going to have to work hard in anything you do in life. You're going to. You quit this, you go back to your job, you're still going to have to work hard, right? Choose your hard. I said, if I'm going to work hard at something, at least it's going to be at something that's going to pay me a lot of money, right? You put in the time, you put in the effort, right? You invest in yourself, you learn a high-paying skill set, so that increases your value in the marketplace. So now, because of this skill set, it's changing people's lives. It's allowing them. You guys saw Shanika the other day, a couple of weeks ago. She made 40 grand in one day. You know you're not going to be able to do that at a 9-to-5 job. A 9-to-5 job, I'll tell you. So why would I go back to that type of difficult when I rather stay over here? Yeah, this might be a little difficult in the beginning, but I know the end result. The end result, this is going to allow me to make potentially $40,000, $50,000 in one day. Right? So that's what you guys have to understand. That's what you have to realize, that yes, this is a journey, but a journey that's worth it. It's more than worth it. And if you just apply yourself, you'll be surprised. This will pay you for the rest of your life. I promise you, right? I told my sister, I told my little nephew this. I said, hey, listen, when you're going through this life, you're gonna have to work hard. Doesn't matter what it is you do, whether you want to be a doctor, a lawyer, whatever. You go to school. Most people go to school, try to get a degree, do this, do that. And most people graduate with useless degrees they can't even put to use. Degrees that don't even pay, right? Real quick, before I let you guys go, the average person makes what, right? The average single income in the US is 35,000, 36, let's say $40,000. $40,000. Let's put that in perspective, guys. $40,000. Obviously, we're in 2021. This was as of 2019. $40,000. All right. Most people want to have a family, right? That means 2 kids, 2, 3 kids, right? Most people, you wish for to have a house. All right. Most people, you want to have a car. You want to go on vacation. Guys, how are you going to pay for all of this? You cannot support a family. You can barely take care of yourself on a 30 to 40K salary, especially in today's United States. You can't do that. You can't do that. I think people don't really think about these things. So a typical household, right? You got the wife, you got the husband, right? And if your wife, or for all my ladies on here, when you get pregnant, you're out of commission for 9 months. Right? For the most part, you're out of commission for 9 months. So now your spouse, hopefully, right, they got to take care of you. So now you think about it, you're coming in, you got to support 2 people. And then once that baby pops out, now you got to support multiple mouths. Right? That costs money. Guys, $30,000, $40,000 is not going to get it done. It's not. You're setting yourself up. So for anybody that's out there and you're looking for a specific type of lifestyle, you got to ask yourself, you might not want the mansion and you might not want the Ferrari. I get that. But even just a comfortable lifestyle, it's expensive. It costs. It costs to put the kid in school. It costs for you to retire. It costs. It all costs. So when I realized this, I said, whoa, I can't settle down just yet. I can't do this just yet. I got to make sure I get my stuff in order. Every child you bring into this world in today's America is going to cost you about $250,000. It's going to cost you about $250,000. And if you don't set them up correctly, guess what? They're going to be living and you're going to be taking care of them until the day you die, if you're not already going through it right now. So you have to really think, okay, if I invest and I'm going to do certain things, I got to make sure it really pays off. Guys, this will pay off. Right? If you don't want to worry about bills, you have to calculate, okay, how much bills do I have? Do my spouse, do my family have? And how much do I need to be ahead? And I promise you, it's going to be more than $30,000, $40,000 a year. It's going to be probably like triple that, right? And then a lot of you guys, you all live in different parts of the country, right? I'm in New York, one of the more expensive states in the United States. So these are things you guys got to think about. So it's like, okay, you know what? I need to learn the skill set, because if I don't, I'm screwed. Because my $40,000, $50,000 salary is not going to get it done. Make sense? Everybody get that? So you need to learn this. It's not, I want to learn this, I'm thinking about learning. No, you need to learn this. You have no choice. It's either you learn this or you quit and go back to doing what you want to do. But go back to do what you want to do. You're looking at a hard, difficult life. You're looking at a hard, difficult life. I mean, not to put Shanika's stuff out there, but she'll even tell you, right? She has 3 kids. 3 kids. So before trading, she'll tell you life was pretty difficult. It's tough. It's tough. And Shanika had a job, right? Shanika was, HR and everything like that, respectable. But unfortunately, respectable was not getting it done. Respectable was still keeping her stressed. Now she's a little more at ease because she learned a high-paying skill set. You guys understand? So if you have kids, you need to explain this to your kids. You need to let them know that, hey, listen, life is serious. It's not like the old days where, like I tell my parents all the time, yeah, you guys could work one job and take care of the family and pay a house. You can't do that in today's America. Just to even live comfortable, to have a car, have a house, have this and that, you need to make some serious bank. You have to, because if not, you're going to live paycheck to paycheck and you're going to struggle. So if you're tired of struggling, guys, I applaud you to please learn this skill. So that's all the time I got, man. I got to jump on another call. But Shanika, I appreciate you. Love you. Love you guys. Hope you learned a lot. I'm out of here. But let's get it. Let's go. Let's turn up. And a lot of you guys also consider creating a residual income as well. But we on it. All right, Shanika, I'm going to pass this back over to you.
Thank you so much, Steve. Y'all, listen. He done said a mouthful, so it's not much else for me to say. Thank you for definitely doing this team training that we have. We have them every week, guys, okay? And so each week we get on here, and not only do you have access to the Go Live, you have access to the Academy, but me as a mentor, you have access to a whole lot more that you probably would normally have. And so he definitely graced us with his strategy. That's things that he's taught us over the years. And so now you are able to do the same. God bless you too, Philip. Thank y'all. Thank y'all. So we're back in the market. Everyone knows tonight, Cam is going to be on 12 a.m. Eastern Standard Time, getting his bag. So y'all make sure y'all are on with him. And we will see you guys next time. I think this week we have a jam-packed schedule. Make sure you're looking at the schedule. And we will see you guys soon. Y'all have a good night.